In this video, I'm going to walk you through the step-by-step process of filling out Form 5472 so you don't have to stress over hiring a CPA just to get it done. I'll break it down line by line, explain what each part really means, and show you how to handle the tricky sections without all the IRS jargon. By the end, you'll know exactly what info to put where, how to avoid the common mistakes that lead to penalties, and you'll feel confident filing it yourself. Part 1. About your company. 1A. Name and address. Just put your company's legal name and mailing address. If you're outside the US, spell the country out fully. 1B. EIN, your business tax ID, not your SSN. 1C. Total assets, basically what your balance sheet says your assets are at year end. 1D/1E. Business activity plus code. Describe what your company does, for example, importing electronics, and match it with the 6-digit business activity code. 1F. Payments on this form. Add up all the money you report later in Part 4 and possibly Parts 5 and 6. 1G. Total forms 5472 you're filing, you need 1 for each related party. Write how many you're filing this year. 1H. Total payments on all your forms. Combine all your Part 4 totals across every 5, 4, 7, 2 you file. 1I. Consolidated filing box. Only check if you're part of a group return and filing 1, combine 5, 4, 7, 2. 1 Joule. Initial year. If this is your first time ever filing this form for this company, check it. 1K. Number of Part 8 schedules. If you're in cost-sharing arrangements, count how many and note it. 1L/1M. Country and date of incorporation. Straightforward where and when you were formed. 1N. Tax residence countries. If you file as a resident anywhere else, list it. 1O. Where you actually do business. Name the country's no worldwide shortcuts. Now, 50% ownership test. If any foreign person owned 50% or more at any point in the year, check the box. 3. Foreign-owned U.S. point if. If you're a disregarded entity owned 100% by a foreign person, check this. Part 2. Who owns you for 25% plus foreign-owned U.S. companies? Here you identify your big foreign shareholders. 4A to 4E, info about your first major direct foreign owner name, tax IDs US if they have one, foreign TIN if not, country, etc. 5A to 5E, same thing for your second largest direct foreign owner if you have one. 6A to 6E/7A to 7E. Now, the ultimate indirect owners, in other words, the people or companies at the top of the chain who really control 25% or more. You'll need to explain the ownership chain in an attachment. Part 3. Related party you're reporting on. Every Form 5472 is tied to one related party. This section is where you identify them. Box at the top. Are they U.S. or foreign? Check 1. 8A to 8B. Name, address, and tax IDs. Same rules as Part 2. 8C/8D. Their business activity and code. 8E. Relationship. Are they your shareholder, related to your shareholder, or just a related party? 8. F/8. G. Countries where they operate and where they pay taxes. Part 4. Money moving between you and the foreign related party. This is the meat of the form. Break down what you paid them and what they paid you. 9 to 22, income you got, sales, rents, royalties, services, loans you took, interest they paid you, etc. 23 to 36 expenses you paid, purchases, royalties, services they did for you, loans you gave, interest you paid them, insurance, and so on. Totals. Line 22 adds up everything you received. Line 36 adds up everything you paid. Tip: if everything is under $50K, you can round it off as $50,000 or less. Part 5. Only for foreign-owned USDEs. If you're a disregarded entity owned by a foreign person, this is where you describe other transactions that aren't simple cash payments, like when you got capital contributions, made distributions, or reorganized. Attach a note explaining. Part 6. Non-cash or below-market deals. If you traded something other than money, say IP or services, or didn't charge full value, list those here. Attach a schedule with details and fair market value estimates. Part 7. Extra questions everyone answers. 37 to 38. Do you import goods from related parties? If yes, is your book cost higher than customs value? If so, attach an explanation. 39. Is your foreign parent in a cost-sharing arrangement? If yes, fill Part 8. 40. Did you have disallowed deductions under Section 267's hybrid mismatch rules? Say how much. 41. Did you claim the FD2 deduction for sales divided by services to your foreign related party? Break it down by type. 42. For related party loans, did your interest rate stay within IRS safe range? 100 to 130% of AFR. Answer yes or no. 43. Debt and distribution. Questions under Section 385 rules, if applicable. Fill amounts if yes. Part 8. Cost-sharing arrangements. If you're in one, describe it here, what it covers, your benefit share, the intangible development costs, IDCs, and any stock-based comp tied to it. Part 9. Beat base erosion and anti-abuse tax. If you made payments to foreign-related parties that reduce your U.S. taxable income, this is where you show those amounts. Think deductible payments, depreciation on foreign-acquired property, reinsurance, etc. Keep in mind, every time you move money or assets with a foreign parent divided by affiliate, the IRS wants to know in detail. That's why this form feels long. But line by line, it's just who's involved, what moved, how much, and why. Not every company has to bother with Form 5472. If you didn't have any transactions with related parties during the year, you can usually skip it. You're also off the hook if someone else already covered the same ground by filing Form 5471 with Schedule M, or if you're a special type of foreign corporation, like one that files Form 1120 FSC, or has income fully exempt under shipping rules in Section 883. If you're a foreign corporation that doesn't actually have a U.S. presence thanks to a tax treaty and you file Form 8833, you're also in the clear. And if both you and the related party are foreign and your transactions never touch U.S. taxable income or deductions, the IRS doesn't care. But one big exception, if you're a foreign-owned U.S. disregarded entity, you almost always have to file even if nothing really happened. If you're part of a consolidated group, your parent company might file 15472 that covers the whole crew, but technically each company is still on the hook if something goes wrong. Normally, you just attach the form to your regular tax return, but foreign-owned disregarded entities are a little different. They don't file a normal return. Instead, they have to whip up a bare bones Form 1120 with foreign-owned USDE written across the top and attach the 5472. That package then goes off to the IRS in Ogden, Utah, either by fax or mail. The IRS expects everything on the form to be reported on an accrual basis in US dollars. If you're converting from another currency, you'll need to attach the rates you used. They also let you round off if your totals are tiny, under 50 grand can just be shown as $50,000 or less, but the real bite comes with the penalties. Miss the deadline or turn in something incomplete, and you're looking at a $25,000 fine per form, per company. If you don't fix it within 90 days of being notified, another $25,000 hits you, and it keeps stacking up every 30 days after that. Every member of a consolidated group can get dinged separately, and if the IRS thinks you filed false info on purpose, you could even face criminal penalties. On top of that, you're supposed to keep detailed records of every related party transaction, things like invoices, contracts, loan agreements, and pricing documents. The IRS can ask to see them, and if you can't back up your numbers, that's trouble. They admit this isn't a quick form. They estimate the average company spends close to 25 hours between keeping records, figuring out the rules, and actually filling the thing out.